If this is the first market update that you are watching, we are going to start a little bit of history. We're going to dive deep into some graphics, some visuals, so you can see exactly what is happening and what has happened. And then we are going to wrap up with some projections, what I think is coming in the next few months. Now, I have to say, again, I do not have a crystal ball. As confident as I am in my projections, they are just that, my opinion, and what I think will happen. I tend to have had some success in this, but nothing is guaranteed. So with that out of the way, let's talk about mortgage rates. So mortgage rates are on everybody's mind. And while they've been fluctuating pretty drastically over the past year, they seem to be leveling out now in the sixes, whereas they were in the fives in the tail end in the beginning of this year. We're sitting pretty tight in the mid sixes, even high sixes, depending on the lender you're talking to, the product that you're looking at. And that doesn't seem likely to change. And I will dive into that again at the end. But inventory is the one thing that everyone wants to increase, and it just stays stubbornly almost exactly where it has been. We are almost dead even with where we started the year. And while we have fluctuated a little bit, there really needs to be a pretty substantial increase in inventory before I can say with any degree of confidence that I think that prices may start to slip. I'm just not seeing that in the data. And from a logical standpoint, and I've talked to this point so many times, but as long as rates stay high, a lot of sellers who would typically be upgrading or moving into another property here in Ocean City or even elsewhere are simply incentivized to stay put, to make their current home work for them so they don't lose that 3%, sub 3, maybe even a 4% mortgage rate. And that really hurts us on our inventory levels. So one thing that is changing in one category versus the other is the days on market. And you'll see here in a minute, the single family homes, the days on market has increased almost to where it was a couple of years ago. And that was not necessarily expected, especially when you look at what's happening in the condo space where demand is still strong. And that's not to say that single family homes aren't selling, but they tend to be sitting a whole lot longer, probably because the prices are pretty high and they're staying where they are. Now, one thing that I'm excited to bring you this week is a new chart I haven't looked at in the past because this inventory issue that continues to pop up, it really made me curious to see what's going on there. So this is a representation of all new listings that have hit the market in any given month over the past 3 to 4 years. So you can already see that there's a downward trend, right? If we start all the way back in January 2019 to where we are here in May, it's a downward trend. And while, yes, we did pick up from last month to this month, and I'm going to drag my face out of the way so you can see what's going on there. Let me talk through this chart for you real quick. So we have the orange, which are condos, townhouses, and the blue little bars are the single family homes, with the gray being the total inventory in any given month that hit. So one other trend that I picked up on, obviously, besides the pretty steady decline over the last few years, is the fact that the single family inventory, while it's fluctuated, in any given month, we're pretty much on pace with where we were back in 2019. And 2019 continues to be a measuring stick of sorts for me because that was pre-COVID. Now, as you can see with the orange bars, right, that is where we're really seeing that downward trajectory in the condo space. And that would explain a lot of what we're going to talk about here with why the condo demand continues to seem higher, why there seems to still be a lack of inventory. From a single family standpoint, there are a decent amount of homes out there, but not affordable homes, not really below 2 million. There aren't many. Whereas the condos, there used to be a slew of 3-bed, 2-baths across the island, many 4-bed, 2-baths. And there are obviously still some out there, but it's not to the extent that we typically have. So let's talk about pending sales. In my last market update, I had expected the month of May to slow down from a pending sales standpoint more than it actually did. So here we are showing, again, if we look at the blue bars, every May over the past 4 Mays, there has been a decrease, but that decrease is really slowing down to the point where we were only about 5 homes short of where we were last May in a much hotter market. So even though this is a slower market and it feels everybody wants it to be slow, again, the data doesn't really show that. There's still a lot of demand out there. There's homes going under contract and not at decreased prices, which is the thing, again, that many of you are waiting for and I wish would happen because it would allow a lot more people to become owners here in Ocean City. But it's not really the case for the single families or the condos. Now, closed sales, obviously, again, here we are pretty flat in May over the past few years, and even an increase, obviously, over what we saw in 2020 coming out of COVID. But there's nothing to write home about here. It's still pretty strong activity. And while if we were to look at a yearly total, things are going to likely be slower this year than last year. It's only by about 18% is what we're tracking for, a decrease in total transactions by 18%. That's not nothing, but it's not as drastic as everybody expected it to be or wants it to be. That's what we would need, something more drastic to really impact prices. Now, months of inventory, again, continues to be a little bit all over the place, but as you could tell, we took another step back really over the past 2 months compared to where we were. That had a lot to do with inventory being pulled off the market. A lot of those were new construction homes that the builders, developers are waiting for them to actually be complete before they put them back out to be listed because they don't want them sitting out there. Just gives this impression that there's a lot more inventory than there really is because it's not completed yet. So I believe that once some of those come back on the market, we'll see things inch up a little bit. And I want to stay on this for a second because typically 6 months of inventory is what we consider a neutral market, not a buyer's market, not a seller's market. And we have been above that now for almost a year, really, if we go all the way back to August. And what we're going to see is that that corresponds with a flattening out of prices. Now, this ramp up in single family homes, I think, is a little bit more drastic than it is in reality. The numbers don't lie, but the context is important. A lot of these homes, these single families, were newer builds and teardowns that had, been purchased for under $1 million for the land, and then a big new $2+ million home built. Now that we haven't seen quite as much of that recently, things are tapering out. So the market here, I expect to stay pretty flat unless inventory does increase. And again, I do believe that there's going to be some opportunity with the new construction homes in the coming months. I'll get to that in a second. Now, days on market. Again, I mentioned at the beginning of this that they have increased. And as you can see here, we're starting to approach 60 days on market again, which is where we were back in 2021. If we were to take this chart further back into 2020 and 2019, you'd see it closer to 80, 85 days. So we are not quite where we were, but we are creeping back upwards slowly but surely. Now, what does that all mean? Again, in the single family world, you're seeing the picture here that we have more months of inventory than we would see in a neutral market, which should indicate that buyers have a little bit of leverage. We have seen that prices are flattening out. They're no longer selling for continuously higher prices, but they're still high. And here we have days on market increasing and potentially going to level out here. That tells me that we are nearly at equilibrium for single family homes. Again, I don't expect prices to go up. I don't expect them to come down. There are plenty still selling. I believe we had 15 that went under contract in the month of May, which is slightly more than average than we would have in a given month. So the demand is still there. Nothing's coming crashing down. And let's talk about condos because we're about to see very different charts here. So obviously, again, months of inventory have been creeping up, but the scale off to the left is very different. At the top, we have 6 months, which is the balanced market, and we have not sniffed that just yet. The prices are continuing to inch their way up. While there were some periods where they appeared to level out, they have since continued to increase, and that does not seem to be likely to change. I continue to hear stories of unique properties that are getting multiple offers, plenty of condos getting multiple offers, not as many single families in that situation, which again, I'll cover here towards the end. Days on market, I don't want to stay on this for too long. They're still very low. Yes, they're inching up, but if we are getting worried about things crossing 40 days on the market as average, I think we're in pretty good shape. Now, let's talk about where we're going to go. So from a mortgage rate standpoint, again, I don't have a crystal ball here, but supposedly the Fed has likely made their last rate increase for 2023. There's been some talk and some chatter about a potential additional increase coming because the economy continues to heat up. Jobs reports are showing very strong, and all of those things bake into what the Fed is going to do. But again, expectation is that they will not continue to raise rates, and the current mortgage rates reflect that. So I don't expect them to really go up too much or down too much. They should stay in the 6s. Now, for the first time in a while, we actually did have an inventory increase, but a measly 5%. And I say measly because here in our market, that's only about 12 homes. So it's not a substantial increase by any stretch, especially when you look at all of the different types of properties we have here. But I do expect things to grow into June. And if you're in the Facebook group, Tips for Buying an OCNJ, you will have seen my commentary on exactly what is expected to happen in June based off of history. And I was surprised that typically in June, there is a substantial increase in new listings compared to May, which anecdotally I had not experienced, I did not expect, but that is what the data shows. So if that continues to be the case, and here a week into June, we are already up over the last week in May, 50% increase in new listings compared to the last week in May. So whether that's a sign of things to come, I don't want to say too soon, but that would fit with what the expectation is. Now, again, obviously the peak happened back in October at 308 total properties for sale, which is still just about, let's call it 60% of what our inventory normally has been historically, still very low. We are down from there, and really 18% decrease followed by a 2% increase starting this year. Not much to write home about there. So again, inventory is not changing. And if that's not going to change, and the demand, if not all buyers are throwing up their hands and saying, you know what, I'm waiting, I'm tapping out, then the sellers really have no incentive to change what they're doing and the approach they're taking. Now, on that note, again, anecdotally, there is still a property every week or two that I see go under contract at a price that makes me spit out whatever drink I have in my mouth, because it's a ridiculous price to me, in my opinion, higher than it should be. And I expected that to sit or decline in price. But as long as people are buying, again, sellers are going to continue to reach for the moon. And at this point in the condo world, that is going to be continually increasing prices. In the single family world, it's just holding steady at a very, very high number. Now, speaking of prices, right? Again, I think single families have leveled out. We now have 8 months, more or less, of consistent data showing that things have not changed. And again, anecdotally, these rates are really hurting people who would typically move from their condo or duplex into a single family, because it's just untenable, the financial impact that it's going to have on them. So they opt to stay put. There are still people buying. A lot of people are choosing to pay cash versus to finance because of the expense of financing. And I know you're probably going to hear other people out there talking about, well, 6%, 7% historically is a great mortgage rate. They're not incorrect, but saying that without acknowledging the ridiculous increase in prices compared to where they were historically is disingenuous at best. So if you want to be in Ocean City, right, you have a choice. Now is not the best time to buy from a strict financial standpoint. There's the case that can be made that this may be the best time to buy for the near future. We don't know what the future holds. A lot of people who are still choosing to buy have been waiting for 2 years, 5 years, 10 years. And ultimately, they don't want to wait anymore, because these are memories that are passing by, right? This is time that could have been spent here that you're just missing out on. You can't recoup those. So I'm not saying that you have to buy. I'm not recommending that you buy. Everything is a personal decision. However, acknowledging that there's a chance that things may not come down the way that everybody wants them to needs to be on your mind. You need to have that conversation with somebody to help ascertain what the best move is for you, whether that's your spouse, whether that's a family member, whether that's a real estate agent, whomever it is. Having these conversations is important, because if you are unclear on what decision you want to make, I promise you that when the opportunity comes, you won't be prepared for it as you could have been, and you may miss the boat. So price-wise, again, I don't see anything really coming down. We need more inventory, and it's simply not coming, and it's not going to materialize out of thin air. And again, when I say more inventory, I don't mean another 5%. I think we need to cross the 300 to 350 property threshold before we start to see enough, we'll just say, variation out there in the market, enough choice to where some sellers will now have to compete on price versus being the only game in town. So unless that happens, again, I've heard people talking foreclosures. Maybe that will be what saves us. The strength of buyers has gone up tremendously since the financial crisis. And I know that's what really was the start of the snowball effect last time. I'm not saying that it's impossible, but I'm saying that it's unlikely that that's going to be the case this time. So I don't see where the inventory is going to come from. It's not going to materialize. Builders and developers are building on every square inch of this island, as they always are. There's just not much coming on that regard. So last but not least, days on market. Again, single families are likely, I think, to slowly continue to increase or level out as we see the other statistics in the single family world level out as well. And condos, again, unless there's a big spike in inventory, the amount of chaos that's out there is crazy. There's a waterfront, a bayfront, 3-bed, 2-bath duplex that hit the market at $1,350,000. And in my eyes, that was not a completely unreasonable price, but it was certainly higher than I would have liked to see it, based on comps, based on history. However, 7 offers over asking. Just crazy. And that happened all within a 24 to maybe 36-hour period. So again, there are anecdotes out there like this. I have plenty of them. If you want to talk through these things, by all means, you can reach out to me any of the ways you see here. I'm happy to chat about the market, about your specific situation. Just don't be shy. I don't judge. I'm here to help. And there's also never going to be any pressure. Anybody who has worked with me, who is in this Facebook group or on YouTube, if you're watching, or if you're listening to the podcast, I appreciate you. But if you want to get in touch with somebody who has worked with me to get a sense for what that experience would be like, feel free to reach out. I'd be happy to connect you with somebody because that reinforcement I've found can be helpful for people who are hesitant. So with that said, I appreciate you hanging out with me as always. I'll see you next time.